Have you ever looked at a company's results headline? Seen the big number and just thought, okay, but what's really going on behind that?
Exactly, trying to cut through the jargon, right, to find the actual story.
Yeah. If that sounds like you, well, you're in the right place.
Definitely. Welcome to the deep dive. Our whole thing is taking stacks of info today. It's official financial reports, press releases, even some internal style questions we use to poke around.
And we pull out the key insights, the stuff that really matters.
We want to give you that shortcut to being properly informed. Maybe find a few surprising bits, have a little fun with it too, keep you, hooked.
And today, we're diving into Oracle Financial Services Software Limited OFSS, specifically their unaudited results for the quarter ending June 30th, 2025.
Yep, hot off the press. The board literally just approved these on July 23rd.
So we've been poring over the official letter to the stock exchange, the actual financial statements, the detailed press release.
We've got it all covered. Think of us as your guides through the maze of numbers.
Right. Our mission today, walk you through the key figures, figure out what's driving their performance, and sort of unpack what it all means for OFSS as a big global player in financial tech.
Let's peel it back. Get to the core of OFSS's Q1 for fiscal 26.
Okay, let's start big picture. Consolidated results, that's everything combined. They reported total revenue of ours, $18,522 million this quarter.
Which is, well, it's up 6% compared to the same time last year. Pretty solid.
And compared to the last quarter, that jumps to 8% growth. That feels like a strong start to their financial year, doesn't it?
It certainly does, but what's really interesting, I think, is when you look below the revenue line at the net income.
Okay, what's the story there?
Well, it held pretty firm. OSS $6,419 million, that's up 4% year over year, which is good. But quarter and quarter, it was basically flat.
Huh. Flat net income. Sometimes that can make people nervous.
It can, but, for a software company like OFSS, it often points towards something else, like strategic reinvestment. Maybe they're pouring money into R&D, pushing new cloud products, maybe expanding the sales team.
So things that hit the profit now but set them up for future growth.
Exactly. It's often about the long game. And actually, the CFO, Avadhut Ketkar, he called it a healthy quarter, emphasizing that consistency. So that context helps explain why flat isn't necessarily bad news here.
Right. Makes sense. And the CEO, Makhard Padalkar, what did he say was driving things?
He pointed directly at, quote, strong cloud wins. That was his phrase. And he also mentioned a robust pipeline for their products coming from both emerging and developed markets.
So cloud and a good backlog of deals. That sounds like a clear direction.
Definitely. And speaking of that pipeline, the CFO gave us a number for their RPO remaining performance obligations.
Okay, refresh my memory, RPO is.
Think of it as future revenue that's basically locked in from existing contracts, stuff they know they'll be paid for. As of June 30th, that stood at RRX 6,327 crore.
Wow, okay. 6,327 crore. How significant is that?
It's pretty significant. I mean, to put it in perspective, that's roughly, about 3.4 times their revenue for this quarter. So it suggests a really substantial, stable backlog, gives a lot of visibility into future earnings.
Got it. Okay, so overall revenue's up. Net income is strategically stable, strong pipeline, confirmed by that RPO number. But the real details often come when you split things up, right?
Always.
They break revenue into product and services. How did those two stack up?
Right. So the products business that includes things like software licenses, cloud subscription fees, maintenance, that's still the lion's share. About 90% of total revenue came in at our $16,743 million. And it saw, decent growth, 5% year over year.
All right, 5% for the big chunk. What about services? IT solutions consulting.
Now, that's where things get interesting. Services is smaller, only ours, $1,779 million in revenue. But get this, it grew 22% year over year.
22%? Okay, wow, that's huge growth, even if it's off a smaller base.
Absolutely jumped. Really significant.
So that makes me wonder about profitability, though. Did that massive services growth actually translate to profit, or did they just spend a lot to, get those deals?
That's the crucial question, isn't it? And the answer seems pretty positive, actually. While the services revenue grew 22% year over year, its segment result, which is basically the operating profit just from that unit before corporate overheads kick in, that segment result grew by an even more impressive 41% year over year.
41% profit growth in services. Okay, that is impressive. So they're not just growing fast, they're getting much more profitable while doing it.
Exactly. It suggests really strong operational leverage or maybe higher value contracts in that segment. Fantastic news for them.
That really paints a picture like services is almost a high growth engine within the bigger company.
Yeah.
But what about the product side then? Revenue grew 5%, but you mentioned the segment result there.
Yeah, on the product side, despite that 5% revenue growth year over year, the segment result actually dipped slightly, down 3% compared to last year.
Okay. Any thoughts on why?
Well, it's a bit of a mixed picture if you look quarter on quarter.
Hmm.
Products profit was actually up 13% compared to the previous quarter, and services profit dipped 4% quarter on quarter.
So some volatility there.
Yeah, that can happen, especially with consulting projects maybe finishing or starting. But I think the strong year-over-year trend for services profitability is the main takeaway. And overall operating income still grew 1% year-over-year, 10% quarter-on-quarter.
Okay.
Oh, and one other thing on costs, those unallocable expenses, kind of the central corporate overheads like HR, finance.
Yeah, the cost's not tied to one specific product line.
Right. Those actually decreased by 28% year over year. That's a pretty big efficiency gain, helps the overall bottom line directly.
28% reduction. Okay, that's
Yeah.
significant. So a dynamic picture on profit, but service is definitely stealing the show on growth and profitability improvement year over year.
Seems that way.
Now, OFSS is global. Their client wins always tell a story. What kind of deals are they signing? Where's the action happening? That gives us a feel for the future, right?
Totally. And the press release highlighted quite a few wins. And what's striking is the strategic nature and the geographic spread.
Like what?
Well, in North America, for example, you've got American insurance firms, U.S. reinsurers signing up for their Oracle Financial Crime and Compliance Management Cloud service.
Okay, so compliance tech, big area.
Huge. And it signals demand for, AI capabilities, reducing costs in that very regulated space.
And it's not just compliance, I assume. Core banking, digital stuff.
Exactly. They mentioned a, quote, distinguished Japanese bank and also a bank in Zimbabwe, both signing up for core banking software. That's like the bank's operating system. It's fundamental. Shows their core products are still in demand globally.
Right, from Japan to Zimbabwe, quite the range.
Absolutely. And then specialized stuff, too. A bank in Malta chose their cash management cloud services. A big U.S. bank signed for analytical applications. So it shows reach into pretty sophisticated areas of finance.
And are these all new clients, or are existing ones expanding too?
Good question. It's a mix. They specifically mentioned Jana Small Finance Bank in India, deepening its relationship, expanding their existing Oracle FlexCube system to cover digital banking, payments, trade finance, the whole next-gen suite.
Oh, okay. So it's not just landing new logos. It's getting existing clients to go deeper, to really transform using their platform.
Precisely. It feels like they're positioning themselves as partners in that digital transformation journey, not just software vendors, covering cloud, compliance, core systems.
It paints a picture of broad demand. You mentioned the geographic spread. Did any specific regions stand out in the overall revenue numbers?
Yes, actually. The contribution from the United States market went up noticeably. It was 25% of their revenue in Q1 last year, and this quarter it was 29%.
Okay, nearly a third of their revenue now from the U.S.? That seems like a positive sign for penetrating a key market.
I'd say so, yeah. Suggests good traction, maybe bigger deals there. India also saw a small uptick from 9% to 10% total revenue.
Good to see growth in key areas. Lastly, any quick hits on things like workforce or, operational metrics? For a software company, people and efficiency are vital.
They really are. Employee count is up slightly, 9,080 people now versus about 8,887 last quarter. So they seem to be hiring maybe to support those cloud projects and services growth.
Makes sense.
And crucially, their attrition rate stayed stable year on year at 10%.
10% in tech. That's actually pretty good, isn't it?
It's very healthy, yeah. Suggests they're holding on to their talent, which is a huge asset in this business. Shows a stable culture, likely.
Good point. And efficiency, like how quickly are they getting paid?
DSO, days of sales, outstanding. Stood at 62 days, which, for a company with a significant services component, is excellent. Much better than typical industry averages. Means they're collecting cash efficiently.
Okay, 62 days. Nice. So let's try and wrap this up. What's the overall takeaway for OFSS in Q1 FY26?
Well, it feels like a quarter defined by strong revenue growth, definitely, particularly powered by that really dynamic services business.
Right, the 22% grower.
Yeah. And net income looks consistent once you understand the strategic context, the reinvestment angle. Management's clearly buzzing about the cloud wins and that robust pipeline.
So key things for the listener to remember. The services business, smaller maybe, but a huge growth engine, right?
Yeah.
22% revenue growth year over year, even better profit growth.
Absolutely. Compared to just 5% for products on the revenue side. And those client wins, they're global. They cover core banking, compliance, digital transformation. Shows really broad appeal for the Oracle Banking Suite.
And the numbers confirm the geographic success, especially the U.S. contribution jumping to 29%. Plus, that RPO figure, RS 6,327 crore, gives a nice look ahead at future contracted revenue.
Indeed. Looking at all the detailed results, the client wins across different places and products, it does make you think, doesn't it?
How so?
Well, for you listening, in this financial world that's changing so fast, with digital and cloud being everything, how critical is OFSS's strategy of offering both products and integrated services together? How important is that combo for their long-term success?
That's a good question, and maybe thinking bigger picture, too. What does the sort of steady, maybe sometimes nuanced, but consistent growth of a giant like OFSS tell us about the wider banking and financial sector? Does it suggest stability, ongoing tech investment?
Exactly. What really stands out to you about their performance this quarter? Lots to chew on there.